Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here are the daily technicals for Tuesday, the 23rd of February 2021. Eurodollar is first. A third bullish white soldier yesterday continued follow-on higher from the pipe bottom made during the middle of last week. Prices eventually punched up through the previously highlighted overhead resistance of the combined flatlining short-medium moving average, currently at 121.53, and the key March 2018 low at 121.52. However, the market retraced a bit to close right on the combined resistance, now likely support. The next overhead resistance is the April 2018 low at 122.12. Overall, there's a lot going on here. Whilst the bear flag idea is now retired, the descending wedge pattern is still live and has now a potential topside target X in the 123.48 area. Additionally, we might just have formed a possible reverse head and shoulders pattern over most of 2021, with the neckline being currently tested in the 121.65 area. If this turns out to be the case, then we might also have a preliminary target X2 in the 122.95 area, though this is by no means certain as yet. So far today, a further attempt higher, currently being baffled by the prospective neckline of the head and shoulders bottom. The next chart is cable, sterling against the US dollar. A third bullish white soldier saying a continued follow-on higher from the recent bullish engulfing pattern. We have now a new high not seen since April 2018. This has all been a follow-on higher, ultimately from the break upwards last week over the dynamic capping resistance, now support of the middle time, currently at 138.78 of the important late June to late September 2020 bullish shift pitchfork. This pitchfork has shown the bullish angle of attack since November last year. Meanwhile, overhead, we have limited strands of resistance, with perhaps the March 2018 high at 142.43 the most significant nearby. So far today, an attempt at a new recent high again, but with limited results. The next chart to look at is Euro Sterling. A second indecisive pattern in a row yesterday, this time an indecisive doji cross. Not the sort of thing you'd like to see if you're a bull out there. Nevertheless, it was still a new low, one not seen since March 2020. We still have the downside full of potential for the recent sideways triangle target X1 in the 84.80 area and a potential target X2 for the head and shoulder stop still in the 85.15 area. So far today, not much. Though we have pushed the recent low a little lower today by one tick so far. There seems to be some overhead resistance from the April 2020 low also at 86.69. The next chart to look at is the US dollar against the Indian rupee. A bearish black soldier, say. I suppose you could say the fourth in a row, though some of those were indecisive spinning tops. It was nevertheless the lowest low and low close since early March 2020, as well as continued close below the overhead resistance of the significant 50% Fibonacci line of the July 2019 to April 2020 move at 72.64. Topside, we still have the capping effect of the descending short moving average, currently at 72.75, and its partner, the November 2020 to date downtrend, that's currently at 72.86. Meanwhile, below, whilst the market breached the September 2019 high at 72.41, it did not manage to close below it. Further down, we have the November 2019 high at 72.24, the January 2020 high at 72.13, and the February high at 72.05. So far today, we've again breached the September 2019 low at 72.41, and so far have managed to stay below it. US dollar against the Brazilian real. A strange reaction yesterday to the previous session's key reversal down. A higher but still bearish black crow. The topside was unsurprisingly halted by the combination of the January 2021 high at 551.59 and the mid-November 2020 high at 552.57 and the lesser Fibonacci level at 552.91. Below we still have the same questionable congestion of supports consisting of the recent 50% Fibonacci line at 540.85, the 50% Fibonacci line of the May to June 2020 move at 539.29, plus medium moving average at 530.78 and the long moving average at 536.38. To be honest, I am a little perplexed by this market's recent action. We may have a scallop pattern or a bump and run reversal in the offing, but it's unclear so far. US dollar against the Mexican peso. A sixth bullish white soldier yesterday and the second consecutive close up over the descending medium moving average, currently at 20.2861. The market's move higher approached the lows of September and October 2020 in the 2083 area and balked at testing them. Additionally, we now have the rapidly descending long moving average, currently at 21.2024, entering the frame. So far today, not much, holding around yesterday's close right now. ICE Brent crude oil futures. A quite impressive bullish engulfing pattern yesterday. It was impressive in part because prices drove up and tested the April 2019 to date downtrend, currently at 65.65, and managed to breach it, though not quite close over it. This downtrend had managed to cap the market last week, which is why the current tries higher are interesting. Beyond this downtrend, we seem to have fairly free territory until we start looking at the 2020 high at 71.75. So far today, a further attempt higher and interesting action. Prices have managed to punch up over the downtrend as well as the congestion at 65.95. We'll now be interested to see what happens on the upside and if we can have consecutive closes over that downtrend. ICE gas oil futures. An impressive combined bullish engulfing pattern and bullish opening white Mariposa yesterday. It was another new recent high and the highest since January 2020, though not a fresh high close. Nevertheless, the market managed to close back up over the February 2020 high once again, if only just. The next overhead resistance of note is at the 50% Fibonacci line of the venerable June 2014 to April 2020 move at 562 3/4. This 50% Fibonacci line is also the gateway to some congestion resistance between 562 3/4 and 596.5 that dates from September to December 2019. So far today, a follow on to yesterday's bullish move with a higher open and move up in this free territory before the 50% Fibonacci line at 562.75. UK FTSE futures. An interesting accompanying action yesterday to the bullish arami and possible hammer seen on Friday. It was a lower, but still bullish, dragonfly doji pattern yesterday. Once again, the market found it hard going, pushing lower through supports, notably the short stroke medium moving average at 65.72 on a closing basis, as well as the June 2020 high at 65.12. Further below with some support from the very recent small band of congestion between 64.40 and 64.85, then another recent small band of congestion between 63.80 and 63.11, and the larger and older congestion dating from March to June 2016 between 63.75 and 60.75. Finally, and contrary to this seemingly hidden bullish recent tendency, there's a hint, just a hint, that we may have a head and shoulders type action building up from November 2020 to date. No more than that right now. So far today, a lower open, below the short stroke medium moving average, but above the June 2020 high that has reacted upwards. However, right now, it does not seem to be holding. German DAX futures. An obtuse day yesterday. No follow-on to the key reversal up on Friday. Instead, an outside day that was also an indecisive doji cross. Prices tested down below the previously highlighted two interesting supports of the short moving average, currently 13.927, and the important rising neckline, currently 13.860, of the ragged late September 2020 to date reverse head and shoulders pattern. but did not close below either. Meanwhile, the top was still capped by the high from 2 weeks ago at 14,185. So far today, a reactionary move lower with a lower opening, and so far a failed attempt lower and a test down to the February 2020 high at 13,821. One could almost imagine the last 3 weeks might be a double top pattern with the neckline at the February 2020 high. US E-mini S&P futures. A bearish black crow yesterday. One could argue this was the third in a row and follow on from the key reversal down last Thursday, though one of those black crows could also be an indecisive spinning top. Prices dropped as far as testing the combination of the January high at 38.62 and the middle time, currently 38.70, of the bullish late December 2020, early February 2021 bullish Andrews pitchfork, though there were no closes below either. So far today, a renewed attempt lower at the middle time and the January high. Below those two we have the rising short stroke medium moving average, currently at 38.04. French CAC 40 futures. A second, though lower, bullish white soldier yesterday. Interestingly, it could also be seen as both an indecisive spinning top and a rare 2-day bearish descending hawk pattern. There's a lot going on here in a very small space. One consistent feature has been the previously highlighted overhead upper bull channel line, currently at 57.90 of the big May 2020 to date broken bull channel. This has been capping the rise since last November. Overall, we are still in between the overhead middle time, currently 58.79, and the lower time below, currently 55.97 of the December 2020 to January 2021 bullish Andrews pitchfork. So far today, a further attempt higher that had pierced both the upper bull channel line and last week's recent high. However, the move up has so far not been maintained, and we're in danger right now of making a bearish engulfing pattern. LME 3-month copper. Another bullish white soldier yesterday, the 12th in a row, though some of those were only just so they resembled indecisive spinning tops more than anything. It was ultimately a continuation higher from the recent rare bullish roof, sometimes called half diamond pattern. We've not seen such highs since August 2011. Looking back there, we're in fairly free territory here, bar some congestions, until the US dollar 10,000 level. So it pays to watch those congestions at 91.60, 93.05, 96.05. So far today, a further attempt higher over the 91.60 area congestion and stopping like a car crashing into a concrete barrier at the congestion at 93.05 before pullback to almost, well, just below unchanged at the moment. Right now it looks very much like a possible spinning top, maybe even a shooting star pattern, though that's yet to be decided. LME 3-month aluminium. A bullish opening white Maribozo yesterday with the highest high and high close since August 2018. Indeed, the market ran up to the August 2018 high level at 21.78 but failed to breach it. So far today, a resumed attempt higher with another new high, barely pushing over the August 2018 high, but then coming back off quite swiftly. Indeed, right now, the pullback looks not only like a bearish closing black Maribozo, but also like a countering bearish Harami to yesterday's bullish action. It seems the August 2018 high packs quite some potency. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. And here is the final bit.